Welcome to the Future is Gold podcast series, hosted by Alexandra. We believe in empowering you to take control of your future so you can live the life that you want. And we do that by allowing you to buy, send, spend, earn and secure the world's oldest currency, gold, while being supported by modern technology. At Nauggets, our mission is clear. We're making gold accessible for everyone by giving you the knowledge and expertise needed to make informed and smart financial decisions that benefit you.
Hi, and welcome back to episode 14 of the Future is Gold podcast. I'm your host, Alexandra. The world of cryptocurrency seems more volatile than ever before, with the aftermath of the FTX group implosion bringing increasing uncertainty and doubt to the industry. In a year that has seen one high-profile crypto casualty after another, including Terra USD, Three Arrows, and Celsius, FTX is the sector's most visible meltdown of all. Experts have been referring to this period as a crypto winter, but winter implies that the season at some point should draw to a close. My guest on this episode, who can definitely shed a little more light on this topic, is Nauggets CEO and co-founder Dhruva Acharya. Dhruva, perhaps you can give our listeners a rundown on what's actually happened in the crypto space of late. Do you actually believe that the crypto bubble has finally burst, or is there still some hope on the horizon?
Yes, Ali, it has been both a surprising and an exciting past few weeks in the crypto space. I think more events will play out over the next few months. We are still trying to understand the situation, and things should be more clear within the next 2 to 3 months. I'm not sure if there was a bubble or not, but prices in the asset class had definitely increased at a quick pace. I can imagine some regulation coming into the sector. The issue is that at its core, crypto was meant to be an asset that was immune to regulation. So there is a structural conflict there. Now, the real question is whether prices will be impacted once regulation comes in. I guess we should just wait and watch the space.
Yeah, I think definitely many investors are trying to make sense of the situation, with many people left wondering what has happened to their large investment. Some people, Dhruva, have been comparing some of the crypto assets to perhaps Ponzi schemes. What are your thoughts on that?
It's tough to give a general opinion on this. There are several crypto tokens which do claim to solve a certain set of real world problems, and they do seem to have some utility built into them. On the other hand, there are several tokens that seem to be cash grabs and get rich quick schemes. I think till regulation comes in to clear the muck, people just have to be aware and beware and use their judgment about crypto.
Definitely, I think judgment will be key. As the old adage goes, if in doubt, don't. Dhruva, we have certainly seen with crypto assets that they are subject to the media effect, with the stories that the news and the media publishes influencing or amplifying current price trends. How exactly do the media, investor sentiment, regulatory action, and even hype play a role in a cryptocurrency's valuation?
Social media seems to have played a massive role in the increase of crypto prices. There's a word called fintech, which basically involves people giving financial advice on TikTok. And as we know, TikTok is a massively powerful social media tool. The challenge is that in the regulated space, there are rules around giving advice regarding financial products. For example, if you want to recommend stocks or bonds, then you would need a license to give advice. Now, crypto is somewhat unregulated, and several fintechers recommend various cryptos without having any advisory license. Perhaps they're not even aware that they need a license to give advice. This does lead to hype, and given the reach of TikTok and other social media platforms, it did lead to massive hype and massive ballooning of crypto prices, in my view.
Wow, fintechers, I wasn't aware of that term. It's definitely interesting the power that these social media influencers and platforms can have on quite an impressionable audience, often with those people even being underage. Dhruva, crypto investing was once the place for experimental risk takers who were seeking a Wild West approach to their fortune hunting. Now, as the space has evolved, it's become more mainstream and garnered increasing interest from both established and hobby investors, and also young people getting advice on TikTok, as you mentioned. And while some investors managed to make some big money, the majority of investors who held a long-term crypto position are unfortunately down. Dhruva, what's your experience been like with crypto assets? Was it ever something that you dabbled in?
Yes, a great point. The challenge is that people now have access to a lot of information, but they might not have the necessary knowledge, background, or education to even analyze the information. I do not personally own any crypto assets, but I have several friends, as a lot of people do, who do own various crypto tokens. My personal view has been that most of this recent price rise has been due to the financial stimulus provided by central banks during COVID. So I always wanted to wait and watch how crypto behaves when this stimulus is withdrawn. And I guess this is what's been playing out right now. There is rampant inflation globally, and central banks have withdrawn this stimulus. I guess we can all see the repercussion of this on crypto prices.
Certainly. We spoke about this rampant inflation and its effects on the market on our previous two podcasts, episodes 12 and 13. If you haven't had a chance to listen to them yet, check them out on nuggets.com. Dhruva, what exactly does the current controversy surrounding crypto mean for other digital assets or digital products on the market?
Well, it's a very interesting time because I think people will be more scared for a while. They definitely did not see this coming. I mean, for example, you mentioned FTX. It was supposed to be one of the more solid players in the market. In fact, a lot of traders that I personally know, they used to swear by that exchange. So I guess people will be more scared now, especially those who have lost money or have had their cryptos frozen in exchanges. There are still core believers in the asset class who might want to add on to their holdings, but the majority, I feel, will move their assets into cold wallets and just wait and watch. So it is a period of fear, uncertainty, and people will definitely stop trading as much as they did before this incident.
Yeah, wow, that's really interesting. I think we can definitely feel the fear that's happening currently in the market. Dhruva, you spoke earlier about regulations coming to the industry. We have certainly seen more and more governments globally cracking down on cryptocurrencies. Do you think that more regulations will be implemented in the industry? Is that something that maybe needs to happen?
There are already some existing regulatory frameworks introduced by governing bodies in Singapore, UAE even. And I feel more and more countries will definitely create some framework to regulate the industry. I think in general, the scope of regulation will increase. For example, in the beginning, once they were starting to bring in some framework to regulate, the idea was more around KYC, where people were more worried about the source of funds and what kind of people were buying into this crypto. But now, since we've been seeing certain exchanges get into trouble, they would increase the scope of regulation to also cover reserves and other risk metrics, something like what banks typically do, but maybe not to that extent. But definitely, the scope of regulation will increase, and it will happen. It's a matter of time.
Dhruva, in the current FTX investigation, a lot of assets were found to be missing, stolen, or unallocated. What does it mean for an asset to be allocated, and how exactly is Nuggets doing that with gold?
I want to comment on FTX. I guess it's an ever evolving situation. We are still, at least I'm personally following the news to see how things evolve with FTX. At Nuggets, customers' funds are either in cash or in gold, and this gold is kept under Brink's custodial logistics. So with Nuggets, customers own a part of real solid bar of gold, and this bar of gold is more than 99.95% pure. In fact, once a customer gets at least a kilo of gold, they can even ask for a delivery if they want to. So customers' money is backed by a part of a real gold bar with Nuggets.
That's great. So, Dhruva, while there has always been volatility and risk associated with crypto assets, what we're seeing now is many young investors are looking for greater security when considering places to park or invest their cash. When uncertainty strikes, we can always look to more traditional assets to preserve and safeguard our wealth. Dhruva, a trend that we have noticed at Nuggets now is that more millennials are looking for more tangible investment options like real estate and precious metals. Why do you think that is so?
That's a good question, Alex. So, real estate and gold have had several centuries of track record compared to crypto. Crypto has perhaps seen a decade of analyzable history, whereas real estate and gold have definitely got a better track record in preserving and slowly growing wealth. In general, your wealth should be protected with these assets and grow at a steady pace. So, it might not double in a year like crypto, but it will definitely not become half in a year, which can happen with crypto. So I can see or I can imagine people starting to look at gold and real estate again with renewed interest.
Yeah, I think certainly with gold, you won't have those massive, massive gains, but you're not also going to have those massive, massive losses as well. It really tends to hold its value. And we do see those kind of steady rises over time, which is probably something you should be looking to when thinking to park your cash, not these massive big wins and falls that people have been experiencing with crypto. Dhruva, do you think that gold will gain from the crypto crash?
This is a little hard to predict. There are, besides crypto crash, there are several geopolitical and macro events happening simultaneously around the globe. For example, there is inflation, there is war going on, and it is an ever evolving situation. So multiple things impact price of asset classes. I guess we need to wait and watch. And anybody who wants to buy into these asset classes needs to be very wary and do their proper analysis before getting into these situations.
Absolutely. Now, Dhruva, gold isn't just an asset for boomers or Gen X anymore. Millennials now have the opportunity and, more importantly, the digital savvy to own, invest in, and sell it now too. More and more millennials are becoming empowered to download simple gold apps like what we offer at Nuggets to include gold in their portfolio and reap its benefits. And with minimum transactions as low as $10, anyone can now really get started. Dhruva, how safe is digital gold?
The thing about digital gold is that it is backed by a real asset that is gold. And like I mentioned previously, gold has a good track record in preserving wealth and protecting against inflation. It is a stable asset. It might not make you supremely wealthy, but it does provide some sort of a risk hedge against risky assets. So it definitely is a good asset to add to any portfolio for most investors.
Dhruva, I've got an anecdotal story for you now from one of our Nuggets customers. This customer of ours was a big crypto investor, and he actually purchased a whole bunch of Nuggets gold to hedge against his crypto investments. Now that it seems the house of crypto cards has fallen, and what he's left with in his portfolio is mainly just the gold. The lesson here to our listeners is to ensure to diversify your portfolio wherever possible. And gold still remains an excellent hedge in a well balanced portfolio. Dhruva, do you have any final thoughts or further advice for our listeners?
It's a great story, Ali. So what I feel is that what the problem with crypto was that people were really taking massive bets with all of their money. And if you want to do this asset class, you have to do something called risk sizing. So, for example, if you have a certain amount of money, you should allocate a part of it to crypto assets. But what people were doing is that they were allocating everything that they own to crypto assets, and that is just taking massive risk. My final thoughts would be that just be wary of the various investment products out there. Do your research. Don't get swayed by social media influencers and hype. Respect your hard earned money. Do proper research before investing. And definitely question if someone is offering huge returns or promising to double your money. It's very tough or and very rare to come against or come across any free or easy rides in your life. So if somebody is offering you massive returns, question that before you put your money to work.
Good advice, Dhruva. I think if something seems too good to be true, it usually is. Well, Dhruva, it has been a pleasure having you back on the podcast. I really appreciate your insights on this episode. It certainly has been a tumultuous year for crypto assets. We looked at what's actually been happening of late, including the role that the media and hype have on the valuation of an asset. We took a closer look at how this changing industry affects the overall fintech landscape. And our final topic, we looked at alternative stores of value, with hope still on the horizon as many traditional assets like gold become digitized and easily available through simple user-friendly apps like Nauggets. No matter what happens, the one thing we can all count on in this rapidly growing fintech space is change. To keep up to date with the latest financial trends and insights, follow our podcast for more episodes. We also dive deeper into topics like this on the Nauggets blog. Head to nauggets.com to learn more.
Thanks for listening to the Future is Gold podcast. For links and contact details relevant to this episode, please see the show notes. Don't forget to subscribe to our podcast series so you'll know when the next episode is live. And follow Nauggets on social media for more gold standard content. Information contained within this series is general in nature and not directed to your personal situation. So please reach out to us or your financial expert for a more tailored approach. This podcast is a Story League production.